Welcome back. Now let's take a look at exercise 2-15, in which we are going to post the transactions from the journal into the T accounts, that's into the ledger. So they've given us journal entries. We've done the transaction analysis. It's already in the journal. We need to post it into the T accounts. Now let's look at what they've given over here in this information. They're telling us post each transaction to the T accounts and compute the ending balance. So we have two things to do. First, post everything and all the journal entries, and then find the balance. They've told us we have beginning balances for cash, accounts receivable, supplies, accounts payable, and deferred revenue. Then they're telling us service revenue and advertising expense each have zero balances. If it has a zero balance, you don't have to write zero balance. In some cases, if in the ledger they have beginning balance a spot for it, then you will put zero balance for those accounts. So what I have over here is, just so that we can visually see this, I have all the accounts that have beginning balances highlighted in yellow. So we just know where those numbers came from. So we have these 5 accounts that have beginning balances. Revenue and advertising expense doesn't have any beginning balance. So what we would do is go to each transaction. In the journal, you had accounts receivable debit, revenues credit, accounts receivable debit. So look for the accounts receivable account. On the debit side, we put that amount 8,400. Service revenue, we have 8,400 credit. So go to service revenue, 8,400 on the credit side. Now I'm just going to highlight these two, let me just highlight this one over here, indicating I've done the posting. You want to make sure you do that so that you don't post the numbers a second time. And make sure you post both the debit and the credit. The next transaction was supplies debit, accounts payable credit. So supplies, I'll post the 2,300, which means I purchased supplies on account, accounts payable credit. On the credit side, I'll put that 2,300, and I will mark this transaction as posted. The third transaction, cash debit, accounts receivable credit. So a customer who owed me money has paid me that money. Cash debit, 10,200, I posted on the debit side. Accounts receivable credit, I'm decreasing accounts receivable. On the credit side, I put 10,200. Again, the word posting simply means I'm taking the number from one book to another book, from the journal into the ledger. So I'm done with transaction number 3. Transaction number 4, I paid for advertising. Advertising expense debit, cash credit. I incurred an expense. Advertising expense debit, I paid cash, so cash is credit. On the credit side, I'll put that number. I've taken care of that journal entry. Moving on to the 5th, accounts payable debit, cash credit. I owed money and I paid that money. That's what this journal entry means. Accounts payable is decreasing because I'm paying it off. So accounts payable debit, 3,700. Cash credit, 3,700. So we are done with number 5. Moving on to the last one, cash debit, deferred revenue credit. Cash debit means I received cash. Deferred revenue credit means I didn't do the work as yet. My customer has paid me in advance. The word defer means to postpone. I'm going to postpone the recognition of revenue to the period in which I actually do the work. But for now, I got the cash, so cash is going to be debited, and deferred revenue is going to be credited. So I have finished posting all the journals, all the transactions from the journal into the ledger. So I've done one part of the exercise. Second part they're telling me to do is to calculate the ending balances. So here's what I would tell you. Start out with the ones that have only one entry in it. That is the ending balance. You don't need to do anything. I'm just going to put this in a different color, red, to indicate that is the ending balance. This number, that's the ending balance. So 8,400 for service revenue. Advertising was 1,000. There was only one entry. Then if you can quickly look in case of a small exercise like this you can do. If you have numbers only on one side, just add those up. So my supplies, I have 2,700, and deferred revenue, I have 1,400. I added up these numbers. So these were easy. If there's only one number, that is the balance. If there are two or more numbers on only one side, just add those up and that's the balance. Well, now if you look at cash, accounts receivable, accounts payable, you have numbers on both sides. So here's what you do. Let's start with cash. Add up the debit side. Put this in black. I'm going to put it in a different color again so we can remember that these are subtotals. I added up the debit side. I added up the credit side. Take the difference between the two and put it under the side that is larger. Put it under the side that's larger. So my balance is $10,000. Accounts receivable. Let's add up the debits, add up the credits. Credits, there was only one number, but still put that down so you know that these are the two numbers you need to now take the difference. Again, on this side, take the difference and put the amount, that's the balance, 2,400. Accounts payable, we have only one number over here, but we're adding that column. We have two numbers here, add those numbers up. Now on the credit side is larger than the debit side. Take the difference and put the balance over here on the credit side. So if you look at this, we have the balance that we arrive at the end after we have posted all the journal entries. Now, this is the T accounts which the accountants use. In our class, we'll be using this every day, all the time. But most companies, when they do it using accounting software, they have it in a ledger and it looks a little different. Let me show you how that's going to look. So I'm going to hide these columns for a minute. Actually, not all of them. Let me hide these columns. Okay. So this is what if you had a ledger account, this is what it would look like. It's the same like the T account, but let me show you what it's going to look like when you have it over here. The first line, you have the name of the account. It's cash. You have a column for date. Now, if you noticed in T accounts, I didn't put dates at all. But here you would have all the dates. You would also have account titles. This 10,200. Cash increased. Why did it increase? How did it increase? What was the account that was credited? I don't know that when I see a T account. But in the ledger, you will see that. Then you have a column for debit, credit, and balance. You will calculate the balance after every single posting. Every time you post, that is, you transfer from the journal to the ledger, you will have to update the balance. So again, we had a beginning balance of 3,400. I have that. I wrote beginning balance and I wrote 3,400. Then now let's look through over here. Remember, not all transactions affected cash. So I'm just going to do this over here now. I will highlight when cash was, I want to highlight when cash is debited or credited, because that's all I'm talking about right now. Okay. So cash was debited 10,200. It was debited because a customer paid me. Accounts receivable was credited. So over here under title, I will write accounts receivable. On the debit side, I'm going to put 10,200. 3,400 plus 10,200, I come up with my total 13,600. Then I look at the fourth, cash was credited. The reason I paid cash is because of advertising expense. So I will write advertising expense over here. On the credit side, I'll put 1,000. And now my balance has dropped to 12,600. My fifth transaction, again, I paid cash to a vendor I owed. So I'll write accounts payable over here. On the credit side, I'll put 3,700 and update my balance to 8,900. And then in the last transaction, I got cash from a customer in advance. I'll write deferred revenue over here on the debit side. I'll put this 1,100 and calculate the balance again. Now, if you see, the balance that we had over here is the same balance you're going to end up with. It's not going to be different. It's just how I do the presentation. Also, what I'll ask you to focus your attention on for a second is, look at the debit and credit. That's the same as we had over here. Only difference is this balance was put on the debit because cash has a debit balance. We had put that over here. Now, if you look at these two formats, obviously this, when you're doing your work over here in class, the T account is a whole lot easier. Because if I just asked you for the cash balance at the end of the month, you want to give me this answer, $10,000, you don't need to give me all this calculation. In the real world, this is obviously a lot more useful because every day I need to know how much cash I have on hand. For instance, when I'm paying cash, I need to know how much cash I have before I write that check. After I wrote that check, I'm writing yet another check. I need to make sure I have sufficient money. So the ledger account is used in the real world, but for our purposes, we are going to be using T accounts in class. When you do your assignment on Connect, be very careful and see what the presentation is. If they're asking you for a ledger, make sure you fill out all of these. You will have to calculate the balances after every transaction. All of this information is required. So always pay attention and see what has been asked of you and do the exercise completely. So with this, we'll move on to the next exercise.